Welcome along to our second session of the day. This session is about the future of out-of-town retail and leisure, where we'll discuss growth challenges and changing strategies. So I'm joined by our expert panel, which comprises Duncan Costin, Property Director at Pure Gym in the middle here, Sean Riley, Head of Acquisitions for UK and Ireland at Mountain Warehouse, on the end there, and Matthew Reid, Head of Retail Parks at British Land. Welcome along, chaps. Thanks for joining us today. Now, there will be a short Q&A session at the end of this debate, so please feel free to ask any questions. Don't be shy. We want to hear from you. They were very shy in session one. So, please tell us your thoughts, ask a question. You'll be welcome. And also do turn your mobiles to silent if you haven't done so already. Thank you. So let's start with a bit of crystal ball gazing, shall we? What do the next 12, 24 and 36 months hold for out-of-town retail? Can there be a clear strategy for continued growth? Matt, let's start with you.
Thank you very much. Yes, there can be a clear strategy for continued growth. I think the next 12 months will be quite an interesting period. Some of the government policies from the last budget will clearly have a bit of an impact as we go into the next 6 to 12 month period. That might slow down some growth. We were nicely seeing the market really start to bubble away just before last November. That said, I think what we'll see on the retail park side, some of those policies I think will play into retail parks accelerating. I think we may see some slightly more negative impacts on high street stores, potentially secondary shopping centres where tax increases, labour cost increases, on top of other issues will mean that retailers might look at that space and the affordability of that space in more detail. On the flip side, retail parks we know are cost-effective, efficient, and effective ways for retailers to deliver omni-channel platforms. So I think we'll see that accelerate through this year and into the next 24 and 36 months. I think what we'll continue to see is strong retailers getting stronger. I think the work that the two gentlemen next to me have done with their various brands, the likes of Marks and Spencer's, continuing to acquire space, get their formats right, really drive footfall, really drive sales, really drive profitability. But we'll also see some new entrants coming to the market. We're starting to see more healthcare.
We will come on to that, Matt.
Jumping ahead.
Yes, jumping ahead there. No, absolutely, we will. And we will. I do want to discuss that in more detail. But obviously, retail parks are hugely important for British Land, right?
Massively. We've actually deployed about 1.1 billion since 2021 in acquiring retail parks. We now own 52 parks across the UK, so they're about 35% of our entire property ownership. So we've, post-COVID, really seen an opportunity to push into this sector. We've seen retailers responding really positively to that, and very much it's something we want to continue doing going forward.
Great stuff. Sean and Duncan, how important is the out-of-town market for your expansion strategies? Sean, let's start with you.
Well, very much so. I mean, the UK store estate is around 300 stores, and a quarter of those are retail parks. But last year, for example, we acquired 30 stores, of which 20 were on retail parks. So we're increasing the proportion of retail parks within the store estate. And going forwards, we expect to do the same. The challenge, to answer your question, what the next sort of 12, 24, 36 months hold, is where that growth is coming from in the future. In recent years, it has been organic growth, retailers moving off parks, other retailers moving on parks, as opposed to new retail park development. And that's something which is going to be a challenge for all of us.
Yeah, absolutely. Duncan, how about you guys? I mean, fitness is huge, isn't it? Leisure.
Yeah, I mean, we're a fairly new entrant to the out-of-town market, but it's been hugely important to us over the last 10 years and has accounted for probably the majority of our new sites. We are have been for the last couple of years one of the biggest acquirers in terms of number of units on retail parks. And they're great because we've got parking, 24-hour access is easy. We've only ever got at least at the most 2 neighbours, so acoustic issues are less than in town, and it's absolutely been the focus for us. In terms of strategy going forwards, yeah, we'd love to continue, but there's not a lot of new stock coming to the market. We've been somewhat reliant on corporate failures to take units, or landlords being able to engineer other occupiers out of space at the end of leases. But it's certainly a continued focus for us to try and expand on the retail parks.
So have you turned your attention away from sort of high street, town centre locations to more edge of town, out of town retail parks?
I think over the last 10 years, yes, outside of London, there obviously aren't many retail parks inside the M25, and those that do exist are very, very expensive, and you don't really get much in terms of vacancy there. But we're now going on. We've now launched smaller formats, and we're going into a lot of market towns where there isn't any retail warehousing. So we have to focus on shopping centres, high streets. But where there is a retail park, we'll always try and get on it if we can make space available.
Yeah. Sean, have you turned your attentions away from the high street in favour of retail parks?
No, high streets are, some of our very best stores are on high streets. And what's interesting is those very best stores tend to be where there is no compelling retail park alternative. We like soft retail parks, the sort of shopping park lineup rather than a traditional bulky retail park. So those local authorities which have resisted the political pressure or economic pressure to develop a shopping park and still have a sort of a healthy high street, we do really well. The challenge for us is size. Our size requirement has grown significantly in the last 5 years or so, and retail park stores are larger. Traditional, within our UK estate, the average retail park store size is about 6,500 feet. The average high street store size is about 3,500 feet. And those 20 retail park stores that we acquired last year, the average of those is 8,500 feet. So if we're trying to get the bigger stores, it's hard to get them in town.
Yeah, it's difficult getting space on retail parks these days, isn't it, Matt? I mean, there's not as many voids as there used to be.
No, it's one of those fantastic successes of the recent market, but it is also a potential risk from a landlord perspective. Our occupancy on the BL portfolio is about 99%, so we're not carrying a lot of vacant space. I think the wider market's 95, 96%. As Duncan says, there is an element of relying on retailer insolvencies to create the space that gives us the opportunity to relet to retailers to drive rental growth. I think also quite uniquely for this point in the market, it's been a long, long time since landlords have had the ability to properly asset manage assets. I would say almost entirely in the period from Brexit through to post-COVID, it's been all about filling vacant space and making sure you're getting those units let. Now, space is largely let. It's more about thinking about, well, how do I create additional value? Can I look at cutting and carving space? Can I look at taking retailers out to create bigger stores? The rents are starting to get to a level where, from a landlord's perspective, that investment starts to make sense. So I think we'll find more creative solutions to finding space for retailers.
So there's a lack of space throughout the UK.
On retail parks.
On retail parks. Does that mean there could be spades in the ground at some point in the near future, Matt?
Yes. Eventually, I think that's going to happen. From where we sit at this point in time, build costs, unfortunately, are more and more expensive. So I think it's quite challenging to get the fundamental investment returns to stack on new build developments at this point in time. Not some will stack in the right locations with the right rents. You'll be able to build retail parks. One of the reasons we are still acquiring retail parks and really love the format is we can buy as-built retail parks, largely fully let, for far less than the replacement cost of actually building that asset. So I think we're still a little bit away from getting the rents to a level that we're going to start a real flow of development. I would also say the other reason we love retail parks is the entire pipeline or entire base of square footage in the retail park market. Only 5% of that has been built in the last 10 years. So there is a lot of retail parks being built. That constrained supply, from a landlord's perspective, is a fundamental ingredient to underwriting good investments.
Good. So we're not going to say a year or when...
There's certainly no announcement about building retail parks here. No, sorry.
How is the diversification of use, such as leisure and healthcare, going to shape out-of-town destinations? And do all the different users get along? Sean, do you love your neighbours?
Yeah, these gyms who nick all the parking spaces. No, of course, it's a healthy retail park with lots of visitors is great because, we all benefit from footfall generated by other occupiers. Sometimes those other occupiers are, we get on well with sort of gyms and other occupiers, but it's not always perfect. There's a bit of a drive towards sort of healthcare uses on retail parks. I'm not sure what they bring. There's a bit of a drive from landlords to drop some parking spaces to EV charging. I'm not sure what that brings to other occupiers on the park. But a healthy retail park will be full, and it will, have a variety of uses. F&B on retail parks is a definite positive. Definite positive, not just so that the likes of me and Duncan can go have a cup of coffee when we're driving around the country looking at stores, but just for dwell time.
And Duncan, do you see Costa customers and Pure Gym customers having fisticuffs over parking spaces?
Yeah, look, gyms are quite high footfall businesses, and we can put a strain on car parking, especially when it's tight. But as Sean said, we also drive footfall, which drives sales for people. Our typical visit times, peak visit times, are not necessarily quite the same as retailers. So there's a bit of a crossover, and I think just it means that generally the park gets more use. I think gyms are absolutely a positive for the vast majority of parks in terms of driving footfall. If people make sales, they stay, they can afford to pay more rent. Matt's happy, Sean's happy, so we just make everybody happy.
You do know each other, don't you, all of you?
Never met these chaps before in my life.
They are friends, so good. The friendly banter's fine. So do you talk to each other and support each other as retailers, if issues arise on a park?
Yeah, I think the estates functions within any retail or leisure business. They'll always communicate, whether it's about talking about rental evidence or whether it's about parking issues or whether it's about service charge disputes or whatever. We could probably do with talking to landlords a bit more, I think, rather than just talking to each other, but which I don't know what Matt's view on that is.
Now, Matt, we touched on it earlier, but let's discuss new entrants into the market. Who are they and how can they impact the tenant mix? I know you've got a couple in mind.
Well, I do, and I won't name anyone specifically, but in terms of types of uses, we have been seeing much more interest from healthcare operators. So there's a number of CDC operators, so diagnostic centres, which we've seen pop up off the back of COVID, where there's large hospital waiting lists. It's a very targeted demand. We've recently put an operator into Crown Point Shopping Park in Denton. These are the sorts of uses, to Sean's point earlier, we and are about as landlords. Is it right for the park? Is it not? What we've seen off the back of that, one is some significant investment into some fantastic equipment that's gone into that unit or two units, but also a different type of footfall, quite frequent footfall of people coming for those convenient uses, which is part of the reasons why customers love retail parks. They can come do a GP appointment, blood test, X-ray, MRI scan. At the same time, if they're waiting for results or want to do something else, they can pop across the road to the gym, Massive warehouse. On Denton, there's an Aldi food store. A number of other retail stores on the park. So that sort of holistic approach to retail we think is quite important. Not every park is going to be appropriate for that. More dentists are also looking at coming onto retail parks. So amalgamating dental contracts with the NHS, where there might be 4 or 5 dentists in a town, bringing it into one big store, becomes a hub. And again, if you've got people coming for regular appointments, it's another reason to spend money at the park, drives footfall, drives spend, which is good for everyone, hopefully. In terms of other trends, I suspect the other landlords and retailers in the park in the room are seeing there's still a lot of demand for leisure. In having on a big shopping park, especially having some really good leisure uses, whether that be bowling, a sort of Ninja Warriors-esque type offer, drives a different type of footfall, different type of dwell time, different type of spend, which we find to be quite complementary to retailers on the parks. And then fast food. If you haven't tried fast chicken recently, there's a whole spate of chicken operators expanding at the moment.
Yeah, absolutely. So you can eat loads of chicken wings and then go and work.
And then go to Pure Gym. It's fantastic.
And get your blood pressure taken.
And have your blood pressure done.
The one-stop shop.
Exactly.
There's also, you touched on healthcare earlier on. There's also healthcare for animals that seems to be a little bit of a trend now.
We are starting to see it. We've got more and more contact with vets across the UK. I think, again, seeing an opportunity to relocate multiple vet practices into one bigger store. If they do that on a retail park, that invariably will have fantastic accessibility, free car parking. It just means that more people can get there, more people can make their appointments. It's a more profitable vets for them. And again, from our perspective, it's driving repeat, regular footfall. And we've seen that. The best example of that has been the discount food operators in the last 5-6 years. If you're driving weekly, twice weekly footfall, they're not always going to shop at the other retailers on the park, but they are probably going to spend more money when they come in. And that sort of repeat business means that you're going to increase spend across the park, which hopefully drives profitability for these guys next to me, which then helps us drive rents. So it's a nice self-fulfilling cycle, guys.
Yeah.
It's great being a landlord, isn't it?
It's been a long time coming, Mark.
I know. You've waited a long time. And there are various retailers on the expansion trail. For example, Superdrug, who are looking for 25 new out-of-town stores this year. Having chats with them at all?
Oh, we chat to every retailer we can. I mean, so we pride ourselves as a business on trying to have the best possible retailer relationships. We don't always get it right. We do sometimes make mistakes, but we'll always try and make sure that we're in regular contact with our customers, addressing issues, but also understanding what are they trying to achieve. Our current store format's right for them. Do they need bigger stores, smaller stores, different types of stores? How can we fulfill that? If you're not talking, you're not going to understand what those challenges are for them, and you're not going to be able to help them address those challenges. So I think that positive engagement is really pivotal to our business.
Yeah, absolutely. Sadly, retailer Hobbycraft announced its CVA last week. And as we know, Hobbycraft has a number of nationwide out-of-town sites. Is this a worry for landlords like yourselves?
No, it's not a worry. I would say the beauty of COVID, not that there were many, but one of the strengths of what came off the back of that was we saw a lot of legacy physical retailers who had underinvested for quite a sustained period of time fail. It kind of cleared the deadwood out from our market, and what we've got now is an incredibly robust retail landscape across the board, not just on retail parks, but especially on parks, where you've got some really strong covenants. They really understand their formats, how they trade online, how they trade from physical stores, how all of that knits together. It's never great when a business like Hobbycraft is struggling, but it does create opportunity. And so because our occupational levels are at 99%, when a business like Hobbycraft has some challenges, it does create an opportunity for us. That said, they're actually not shutting that many stores, so it's not like you're going to see a massive loss of Hobbycraft stores across the UK. I think there's potentially 8 stores closing and another 8 on the shortlist.
Yeah, absolutely. Well, there are challenges, aren't there, out in the market at the moment, as we all know. We have to talk about business rates because, it is a political hot potato. And, of course, the minimum wage increases that have come into effect. Do you think they're going to help or hurt the out-of-town retail and leisure market compared to the high street? Sean, what's your take on that?
Well, long term, rental growth is going to be higher in retail parks than in the high street. So long-term business rates, generally it feels like rates on parks have come down. Long-term, maybe they'll grow again. Long-term business rates in town centres should go down if it was really being valued in accordance with what retailers will pay for space, then business rates in town centres should be significantly lower, which would help retailers to locate in town centres. But in the short term, rates are just a pain in the bum. It's not a fair and level playing field in the UK for retailers with a number of physical stores.
Duncan, what do you want to add?
Yeah, I very much concur with what Sean says. Rates in town centres should be significantly lower than they are, and we'll probably see over time growth in retail parks. A lot of government policy has affected business in recent times. Things like the national insurance, the increase in minimum wage, love them or hate them, they add costs to business, and if you're paying for those things, something else has got to give, or you put your prices up to the consumer. But everything that the government seems to do at the moment impacts business in one way or another.
Yeah.
Negatively, it appears.
Matt, do you think out of town will be able to outlast the high street with these policies? Is it seen as a safer investment, do you think?
I think it depends on your perspective as an investor. So there will always be investors that look for high street investments, and there are some incredibly vibrant high streets across the UK. There are some towns that are struggling. I think overall at the moment, everything goes in cycles. Retail parks are having a fantastic cycle at this point in time. I think they are perfectly placed because of what we had through COVID. They've had a massive bounce. I think there has been a structural shift to the retail park market that we'll see continue for quite a few years. I certainly hope so. I think policies that we've seen come into play since November, unfortunately, are probably more likely to reinforce those structural shifts. And I can see a world in which there are more retailers who have perhaps stayed in more secondary locations because the rent is significantly lower. Whereas now they've got national insurance increases, business rates might actually come down. We'll have to see what comes out of the April or the next announcement on UBRs in November. But if you are operating a store that's making a small profit and your staff costs have gone up and you're probably employing a similar number of staff for a high street store as you are for a retail park store, all of a sudden that high street store might become less cost effective, it's making less profit, and you might start to focus on more out of town stores. So I think that trend may continue. Be an interesting one to watch. Government policy's not been perfectly helpful at the moment.
Understood. I'm aware that we've got about 5 minutes left, and I want to give the audience an opportunity to ask a question or share some thoughts. So would anybody like to ask a question for the panel? There is a roving mic. Lady in the front here. If you'd like to stand up and say who you are and where you're from.
Yes, just a second to clear my name is Lavinia. I work with Lloyds Bank in the data product team. And I want to thank you, the audience here, for the panel here, actually, for the challenges that has been described. The question is around consumer data insights. If you factor in this market intelligence, it hasn't been mentioned, and I presume is an element that is one of the pieces of the puzzle to make informed decisions when looking at venues or how customers behave in different regions of the country. And of course, if you can elaborate, that would be great.
Okay, if you'd like to take that question.
Yeah, I mean, we're a very data-driven business in terms of site selection for new sites, demographics, affluence, competition, cannibalization on our existing estate are all taken into account using various modelling techniques that we've built internally from bought-in external data and internal data that we've assembled ourselves. So yeah, absolutely critical in the decisions that we make, and not just the decisions that we make for whether to acquire a new site and what rent we might be able to afford to pay for that and what capex we might be able to put into the deal. We also use it for making decisions as to whether we break leases or whether we extend leases and whether we reinvest in sites. So yeah, absolutely critical to us, data.
Sure.
We are fantastically unscientific. We're the opposite. We've got 300 stores around the UK. We've got factory outlets, we've got high streets, we've got garden centres, we've got retail parks, we've got shopping centres. So we've got a whole load of different types of store. We've got a very sort of invested in the store growth strategy CEO who gets involved in everything. And a lot of it is on knowing our customer, knowing our market, knowing what adjacencies work well, which is why good relationships with people like BL is good. Because if you can rely upon a landlord of a retail park not to, for example, drop one of your competitors into another store on the same park, that's a really big thing. And some landlords will do that and have done that. But a lot of it, I'm afraid, is down to sort of gut feel and talking to people. At least you asked about retailers talking to each other. We do. We sort of compare notes on stores which are good, stores which are not good, landlords which are ripping you off, landlords which are not ripping you off, all sorts of things like that. And that's really important in a growth strategy as well. To compare notes, and sort of all work towards a sort of the common goal.
Absolutely. You wouldn't rip anybody off, would you?
I mean, he's obviously talking about other land.
I'm sure you are a great lover of data at British Land.
We are, yeah. So we've used data for quite a number of years. It's slightly different way, obviously, from how Duncan might use it. But when we own a site, certainly our big shopping parks, we try and collect a lot of mobile and banking data. Understand where people are coming from, how are they spending, where are they spending, and then you can get a picture of what they might spend. And from that sort of overlay of data, you can then understand, so if I want to go and attract X retailer, are they the right retailer for that demographic, that type of spend? Can I take that data and use that to sell that park to that individual? It creates a different level of conversation. So I think data's really important. I think my caution around it is you can have too much data and then not know what to do with it. So I think making sure you've got really focused, targeted data that's answering key questions, that becomes quite helpful.
Yeah, I think a mix of data and, as Sean was saying, good old-fashioned talking face-to-face.
You can't underwrite gut feel.
No, absolutely. I hope that answers your question. Thank you so much. Thank you. Any other questions? Got time for a quick one? No? Okay, well, we're pretty much... Oh, sorry. I'm being blinded by the lights. Sorry, I didn't see you. What's your name and where are you from?
My name is Angie Lutenko and I work for Kaufman Partners. I think my question is mainly for Matthew because I work on buyer side, so I represent my clients in the eyes of landlords to sign leases. I actually have two questions. One is, when you have 10 offers on the table, what exactly makes you make that decision? And another one is, what in your eyes is the average process of signing a lease? Because in my experience, quite a tedious process in the UK. Thank you.
Yeah. So I'll take the first one first. In a situation where we have 10 offers on a unit, which is a fantastic place to be in, I actually, bizarrely, I sort of joke about it, it increasingly is happening where we have 2 or 3 brands offering for the same space. Price is very important to us, clearly, So our starting point is, what is the highest rent or the best terms across the contract lengths, but also mix and type of occupier. So we won't always default to price. As I say, we've got deep relationships with a lot of our retailers. So across our portfolio, we might do a slightly different deal with a retailer where we know we've got another 3 or 4 conversations coming up across our 50 retail parks. So we can afford to take a view on assets to make sure we get the balance of value across the estate. But price will be a starting point. The actual contracts and negotiating the contract, I'll be amazed if there's not anyone in the room that doesn't find that frustrating. I would say leases have become too lengthy. There are too many clauses. So then the average process takes at least 3 months, I would say, for a standard 5 to 10 year lease. That's too long. It shouldn't take that long. So there needs to be more done by us as an industry to find easier ways to create lease structures that enable us to get through that process more quickly. Now, when we've turned to look at this in the past, invariably we've used solicitors to help advise us on this, and they're not always there wanting to help you find a quicker way to do lease negotiations, because they're obviously linked to fees. But I think what we do as a landlord, and we do try to do with our retailers, is where we have agreed a lease in the last 12 months, and we're doing a new lease with them on another property. We don't say, well, let's start again. We always try and pick up a lease we've agreed, drop it on the next property and say, well, okay, how much of this can we take into the new lease so we're not starting from scratch? That does save some time, and I think removes some frustration that sometimes you can get with the counterparty.
I hope that answers your question. We're probably going to have to leave it there because of we're overrunning on time and people are hungry. But I want to say thanks to our brilliant panelists, Sean, Duncan and Matt, and to you for coming along. Our next session is at 2:25 until 3 o'clock, where we'll be looking at the landlord's perspective. You should stay for that, man. And asking how our landlords adapting to evolving tenants' needs and current future economic challenges. So do join us then. Thank you very much.
Yeah.